If you're a homeowner in Denver and you're underwater on your mortgage, no need to panic, but don't wing it. Let's talk short sales. So, today we're talking with Jeff Phillips and Vindicator Solutions. We're going to talk about short sales. Thanks for being here, Jeff.
Thanks for having me.
Before we dive into this topic, do you want to talk a little bit about what Vindicator Solutions does? What kind of services you offer?
Yeah, I help homeowners navigate tough situations. A lot of the time, it has to do with foreclosure. I've helped people through probate. Also, help them through the short sale process alongside another realtor. That's pretty much what I do. I network with agents, lenders, um, estate planners, financial advisors, all the above to make sure that we're coming up with the right solution.
I love that about you. We're very much aligned because we're both people who are all about giving people what are all their options are, and helping make connections for them to because we don't do everything right. Like we have some specialty, but we're able to connect people with who they need to talk to. Yeah.
Exactly. Right.
So, jumping into this short sale topic, let's start out with a fact or fiction. So, fact or fiction, you have to be in foreclosure to do a short sale.
Fiction, you do not have to be in foreclosure. I've found people before they hit that mark, just not able to make their payment, and good for them. They reach out before they get into that spot.
Now, you do have to be in financial distress because the mortgager, the bank, the lender is not going to approve a short sale if they don't have proof that you're in some sort of financial distress.
A lot of the people that I help are in financial hardship, whether due to loss of job or loss of a family member.
I think that, one of the keys here is acting early, like not only knowing what your options are, but also not waiting until the last minute gives you more options for sure.
Yeah, the longer you wait, the more behind you are, the harder the numbers get to resolve. So the sooner you know you're in a tough spot and you're heading down that path, it's good to make a phone call.
Yeah, for sure. Well, so we jumped in, we started talking about short sales. So let's back up a little bit and let's talk about what exactly is that. I'm sure a lot of people have heard this term before, especially from the 2008 housing crash, and there was tons of short sales happening. But let's talk about like what exactly is a short sale.
Yeah, earlier we talked about underwater. So what that means is essentially is you owe more than what the home is worth. And so usually when experts and professionals can get together and quantify that, the house isn't going to sell for more than the house is worth, then that's when the bank and all parties agree that it's time to go through the short sale process.
Yeah, and I mean, it's better for the bank to let a short sale happen than to go through the foreclosure process. I think it costs them less money to do that. I don't know if I'm right about that.
Banks don't want to own real estate and they don't want to go through the foreclosure process. They just want to be paid what they agreed upon. So it is helping everybody when you get ahead of that and don't let it go through foreclosure.
Yeah, and so off camera, we were kind of talking about what's going on in the market right now. And you said you've been seeing more short sale situations come up. Do you want to talk about that a little bit?
Yeah, I think just due to the pandemic and induced pricing, the low interest rates and values just shot up overnight in the last 5 6 years. And you have people that bought during that time because they were putting in overbids on houses just to get into a house. Well, if they now need to sell, there's a chance that their house could be worth less than what they paid for initially.
For sure. And real estate is a long-term game. Like you should not buy real estate if you're not planning on having it for, at least 5 to 7 years at least. And so what's happened in the market here, like you said, we were in a seller's market for a long time in Denver Metro, and then the pandemic happened, and then the low interest rates happened, and our market just went. And there were, I looked at some houses that looked like their value had increased by 50% in 2 years, which is unheard of, just like those interest rates were an anomaly. Typically, real estate appreciates, I want to say like 5 or 6% a year in Denver Metro. So for places to have appreciated 50% is just whoa. So we came through, 2020, 21, 22. And then the interest rates shot up in the summer of 22. And even in 23, like things were kind of hanging out and people were still buying, but it was sort of stagnant in 23. But now we're in 2026. And unfortunately, if you have some sort of life event, a job change, a marriage, divorce, you need more room for kids or whatever is happening, if you bought in 2020 through 2023 and you're already trying to sell, like you might be underwater on your mortgage. You might not be able to sell and break even.
Yeah, that's one thing that's sad that I see, that the people that are most exposed a lot of the time here in Colorado, especially Colorado Springs, are veterans or active military, people that PCS, that really don't have much of a say. They have to leave. And so that's what I'm seeing in Colorado Springs in my business, are people that have to leave. They don't have a choice.
Right. Well, eh, and are you working mostly in the Springs? Because I thought you were mostly in Denver Metro.
So I have people that I've helped from Greeley all the way down to Colorado
Yeah.
Springs. Yeah, yeah,
Your Denver Metro is from Greeley to the Springs. Got it.
right.
Um, it's such a sad situation too because I've got, especially in the attached market. So sometimes we talk about the detached single family homes versus attached condos and townhomes. And for the most part, the attached market is all HOAs. I mean, there are some townhomes, some duplexes that don't have an HOA, but for the most part, this whole attached market is full of HOAs. And there's some real problems in that market that have made it so that, the single family market has been pretty flat the last 3 years and has held value even while the market is stabilizing. But if you go into that condo townhome market, you can very clearly see the median price point in 2023, 2022, 24. Sorry. You can very clearly see the median price point in 2023, 24, 25. Like that market, this median sales price is going down, and that's not going to help at all when it comes to trying to not be underwater on a mortgage.
Right. I've read many articles across the nation that just say condos are having a tough time taking a huge hit, and a lot of it has to do to the HOA dues, unfortunately. In Colorado, everyone that I've talked to that's been in foreclosure, their their HOAs are usually behind as well. And they once signed up for the HOA when they bought the house. It's maybe 50 to $100, and now it's $300 to $400.
Well, and in Denver Metro, I mean, gone are the days that you could find an HOA that was like 200 or 250 a month because it is just difficult to find anything even in the low threes, I feel like. I mean, we're seeing HOAs that are monthly $400 to $700, and that's a huge chunk. I don't want to get too sidetracked on HOA stuff because I know there's 3 full videos that you can go find about HOAs and those problems.
Yeah.
But to get back to short sales, so you owe more than the home is worth. Um, and if you're in financial distress, you might be able to get your lender to agree to a short sale. And so this is where you put it on the market, or maybe you sell it off market, but you're selling it for less than what you owe on it. And then the bank's taking a hit.
Yeah, no, the bank is accepting the loss at that point. And right now, what I'm seeing is the bank's usually able to negotiate within 15 to sometimes 17% of what the market value of the home is, less what the offer is, so that they could get the deal across the finish line. From an investor standpoint, obviously they're trying to get the best deal possible. And so usually that's when the two worlds collide, of the short sale and investors, is when it becomes a good price for them, and they can get within that range they need to make it a good investment.
Mhm.
So
And, contrary to its name, a short sale is actually very long. So, I mean, a typical deal, if you're doing a cash deal, you could close in 1 or 2 weeks. If you're doing a deal with a typical mortgage, we can close those in 3 or 4 weeks. Um, it's my opinion, short sales are typically 3 months. Is that what you're seeing?
yeah, right now, just talking to my contacts that help along the process of the short sale, it's taken anywhere between 90 and 120 days here. So
Mhm. And, there was something else. Oh, I know. So somebody owes let's use some round numbers, right? Let's say somebody owes 500,000 on a house, but now the house is only worth 400,000. So the extra 100 between 4 and 5 that they owe, that's what the bank when the bank approves a short sale, that's what the bank is saying, never mind about the 100,000. However, depending on the lender, that 100,000 may stick with the homeowner. So there are some lenders, I think last year I did a short sale for a friend, and by the time it was all said and done, whatever the difference was that she owed, the bank wrote off. And so she no longer owed it. But there are other lenders where you still owe them that money, and I think that they'll even want you to make, like, a payment plan or something for it.
yeah, that's correct. I think it's the type of loan it is too. You know, if it's FHA, conventional, or VA, they've all got different guidelines, and obviously every lender does things differently. So it just highly depends on who's the servicer or the lender at that point. So
Well, and not only are they writing that amount off, but, um, they're I if they so they might write it off, they might not. If they write it off, it's possible that they will send you a paper at tax time and that you have to record or tell the IRS about the difference that they wrote off, and it counts as income then on your taxes the next year. Have you seen that?
yeah, no, I've heard stories of that, and that's why after a short sale, you really don't have you really have about 1 or 2 years before you can even think about buying a house again. Whereas in foreclosure, if you go through the foreclosure process and it does go to auction, I believe it's about 7 years or so to where you can't buy a home again. So
I can't remember, I'd have to check with my lender because I know that it's 4 years after the discharge date of a bankruptcy. But on the top of my head, I don't have what that number is for a foreclosure. I should.
no, and once again, it always depends on the type of loan. VA guidelines are different than conventional and FHA.
So here's a myth that I've heard: a short sale completely ruins your credit. What do you think about that, Jeff?
No, it's a myth. It's not absolute. As long as you get ahead of it and you are reaching out to your professional, your realtor, right on time, and you don't miss too many months of payments to the lender, then you can protect your credit. So
I know that my friend who short sold last year, she came back to me a few months later and she was telling me about her credit score, which I thought was really interesting because, you assume you're going to take a hit, right? You know you're taking a hit with a bankruptcy or foreclosure. You assume you're going to take some type of a hit with a short sale because you didn't really pay them what you owed, right? But what she had found was that, when it all went down, there was kind of a dip, but then it crawled back up pretty quickly. Like within 6 months, she wasn't very far off of where she had started before we did the short sale. And so I thought that was really interesting to know that a short sale, like it's gonna hit your credit, but it's not gonna stick and cause problems for years like a foreclosure or a bankruptcy does.
right, usually if you get ahead of it and let the lenders know right away, they do like every 30 days. If you miss a payment, that's like a negative remark. That's why people in foreclosure end up usually with worse records, is because they've gone sometimes 6 to 8 months with no payments.
Mhm.
And if you're in a short sale process and you call, the realtor right away and say, let's see what my options are, and you activate that, then you're not really missing so many months behind of payments. You're acknowledging that you're not able to because of hardship, and they're not going to penalize you for that.
And I think one of the things that we keep coming back to on several of these topics is the idea of, the faster that you figure out what your options are, the better off you are. Because, a lot of this is about strategy. And the longer that you put something off, the fewer options you have and the more difficult it is to deal with. So I guess, that's a big thing too, is as far as trying to protect your credit. Like you might be able to do that if you, address it right away rather than leaving it and just sort of head in the sand. So we've talked about financial hardship being a reason to do a short sale, but what kinds of things qualify somebody to do a short sale?
Yeah, in my experience in my business, I was working with a veteran who was 67 years old, and I went to his door because he was in foreclosure. His payment had been modified so much to where he was paying $3,400 a month, and he had just lost his job, and so his only income was his disability rating, his VA, and some other disability income he had, and he was only making $1,800 a month. And so the next thing that happened too is he found out he had stage 4 cancer. And so, obviously, when, we got involved and, his realtor let the bank know what was going on, they said, "Yeah, we'll approve the short sale at this number." So,
Yeah, so you have to be willing to provide a bunch of documentation to the bank. You have to show that you kind of have an inability to continue making payments. And you have to owe more than the home is worth. And if you're not sure what your home is worth, we talked earlier, like you could check Zestimate, but also, ask your favorite realtor, how much is my home worth?
absolutely, what they're gonna do also is they're gonna send out an appraiser, and so the appraiser is gonna work alongside, the process to let you know what they deem the value of the home, and, at the end of the day, if you have all the paperwork turned in saying you're in hardship, then usually those 2 come together and they all agree that it's a short sale,
Mhm.
so.
So, what do you think are some of the biggest challenges with a short sale?
The timeline, I think that with the short sale, you need a buyer to come take you out of the situation, right? And so a lot of the time when buyers, agents, or just buyers in general hear that it's a short sale, they back out because of the timeline we mentioned, the 90 to 120 days. The one that I just worked on, it took the full 6 months to get through. And not everybody wants to go through that process, wait for it. You don't get any extra reward at the end of it as an agent or anything like that. Matter of fact, you go usually through a lot of work to get it done.
Yes, yes, so much more work than a
So
typical
definitely
deal.
thank your agent if she's helping you through the short sale process. Yeah.
Um, I was thinking about the buyers. So I will definitely steer buyers away from short sales. And some buyers have flexibility, right? Like if they're living with family or friends, or they're in some sort of situation where they have a lot of flexibility, they could do a short sale. But even with those buyers, I am typically steering them away from short sales because instead of, picking from homes and going under contract and moving in, now you're picking a home, and then once you put an offer in on it and the seller accepts it, right? The homeowner signs the offer and you're under contract. But the short sale still has to be approved by the bank, and that takes forever. um, that buyer is kind of stuck there, right? Like that buyer really can't keep going shopping because they can't make offers on something else. Like once you put your offer in and everybody's signed it, like you're sitting there, you're in a holding pattern.
In a perfect world, the buyers also need the timeline that the short sale is gonna provide. And so I've seen in the past out of state cash buyers come that were like, well, we're not gonna be there till this month anyways, and we're cash. And like, oh my gosh, that's like the perfect scenario.
Well, and investors, right? Like investor buyers who they're not trying to move into the home. It purely is a financial asset and part of their portfolio. They don't care when it closes or if it closes. And so it really I think it's just something to be aware of. If you're going to short sale, you're likely not going to be selling to an owner occupant buyer and getting top dollar. You're likely going to be selling to an investor and getting less.
Savvy investors that are familiar with the short sale process, their trade off is the equity that they're getting. Yeah.
No. Let's see. Well, and not so we're talking about challenges with short sales, and like, you can have a buyer and a seller who have agreed on terms and signed a contract, they're under contract, They submit that into the lender for approval, and the lender may or may not approve it. Do you have some experiences with a lender not approving?
There's been times when the guidelines of the lender, if it's a VA loan that's in short sale, they have to pay off all the other liens. So if there's any other liens on the property, well, obviously in a short sale, there's no money left over, and so the negotiator is a integral piece of the equation that has to negotiate with those people that have the lien on the properties to say, listen, what's the most what's the best you can take to get this through? Because we need to get these all taken off so that we can proceed with the sale.
Mhm.
Yeah.
When do you think a short sale makes sense over other options?
This recent one that I'm working on in Forden, she was financially just not no longer able to make the payment on the home. And she also needs a long runway and a timeline to decide where else she's going to live. And so one thing that I do know during the short sale process is that making a payment on the home is no longer necessary. So what I tell my clients is to start saving the money that they would have had whatever they have to save towards the next place they're going to go. And so, given the last person I helped had 6 months of a place to live in their own home without having to make a payment, and so that was one of the pluses of that. Also, we have more agency over the process of them exiting the property. Whereas if we just leave them be, then if they go through foreclosure, then they've got about 10 days after the home sold in auction to leave the house. Usually, when the investor comes and knocks on their door. In the short sale process, I've been able to help people find another place to live before closing.
I have never thought about that before. That's great. Let's see. When else does the short sale make sense? Well, like we said earlier, I mean, it's about equity. Like you can't do the short sale, unless you're upside down. That's the whole point of the short sale. So if you have equity, you're not doing a short sale. Oh, here's an interesting one that I came across. I was talking to some people about potentially doing a short sale, and then I found out that they had pulled home equity out of their primary residence and used that equity to buy this condo with cash. And so, while a short sale was really helpful in getting some homeowners out of a bad situation in the same location, it couldn't really help these people at all because they had bought that place with cash. So, I mean, something to think about. It's definitely a strategy that people use, and I even will recommend it to people. Keep your house, take equity out, buy your next place. I mean, I say use it as a down payment on your next place. But you're really, putting up some risk there if you're taking money out of your home and paying cash for another place. Definitely don't do that with a condo or a townhome. That is way too risky at this point. But yeah, it was a sad conversation, I'll say that.
Yeah, I mean, you definitely want to be cognizant of the market and what it's been doing over the last 5 years and what you can project it's going to do. What I do is I usually go on one of the websites we know that we look up properties, and you can find a graph usually of what the homes were worth, and they go back sometimes at least 5 years. And I get my ruler and I just draw a straight line. I do this in front of the clients I'm helping, and I go, look at what it was worth in 2019, 2020. Here's a ruler. You can see a natural progression of 5% in Denver of appreciation. This is what you want to take out. This is what you want to bank on. You always want to be safe, especially as an investor. You're supposed to be. I mean, you can be risky and go for it, but I always am on the conservative side.
And I think one of the other things to point out about the short sale is that it is a way to avoid foreclosure, right? Because the bank would prefer to do a short sale over a foreclosure. And then, like we mentioned earlier, that doesn't hit your credit the same way.
Usually, the people that are doing short sales before foreclosure are the ones that are more proactive. They've got their finger on the pulse. They know that they're in trouble. They're two different kinds of people. A lot of the people I help in foreclosure, they're not in their right mind a lot of the time. They're making decisions that I'm like, this is why I'm here, because they're not able to make sound decisions. They've been through something traumatic. Whereas if you get a call and someone's like, hey, um, I bought an investment property and my rent isn't covering my mortgage and I don't want this property anymore. What should I do?
Mhm.
It happens to investors. We won't get into Florida, but like I've heard so many stories of people buying homes a certain way and then hoping the rent's going to cover the mortgage. And because of taxes and insurance going up, they're not. And so they just let them go. And that's another way to end up in a short sale is if you're not able to cover your investment property's mortgage.
Yeah, yikes. Definitely, like, if you're interested in investing in real estate and you're not already, for sure partner up with a great realtor, because that person can help guide and advise in terms of, the strategy and what's risky, what's less risky, that kind of thing.
Absolutely.
Mhm. Well, I don't know. I feel like we've covered this short sale topic pretty well. Is there anything else that you want to add about it?
No, I mean, there's nothing, no shame in going through the short sale process. Everyone that I've worked with, and I mean, I know you know a ton about it. It's a good educational piece, and usually the people are relieved that they went through it instead of just kind of light knuckling it.
Yeah, for sure.
Yeah.
Well, Jeff with Vindicator Solutions, thank you so much for being here. Thank you for your time today.
Thank you for having me.
Yeah. All right. We'll see you guys next time. If you like this content and want to support the channel, don't forget to hit the like, subscribe, and alert bells before you go.